You think the best way to trade the market is by looking at price? No, you need to learn how to use Ichimoku Cloud and Parabolic SAR first. Ichimoku Cloud and Parabolic SAR are indicators that help you see the bigger picture. Armed with this market intelligence, you can make better decisions about whether to enter or exit a trade. Listen and learn how to use these indicators together in a trading plan. Okay, keep watching. There is no universal trading strategy since the market is heterogeneous in its structure. To correctly identify trends and pullbacks, you need a sober look at the market, otherwise trading will bring losses. However, attempts to create a universal strategy did not stop. Over 300 years of searching, many strategies were developed and abandoned, trading systems were tested, indicators were created to determine the trend. But everything was useless. We will consider one of these forgotten indicators. By the way, Japanese traders still use it. The history of the Ichimoku indicator. The development of the Ichimoku indicator began in 1930 in Japan. One of the analysts planned to use it to forecast financial markets, mainly for stocks on the Tokyo Stock Exchange. But it became popular in 1950 when the exchange released the Nikkei 225 index. The development of the indicator lasted 30 years. Its creator Goichi Hosoda gave it a catchy name Kinko Hyo, which means look at the balance in Japanese. But since Hosoda published his analytical forecasts under the pseudonym Sanjin Ichimoku, his name was added to the title. In 1960, Hosoda first published the rules and code for his indicator. From that moment, the indicator began to gain popularity around the world. Today, Ichimoku Kinko Hyo is present in any trading terminal. It is used by long-term traders and large investors. However, it is not suitable for intraday trading. Below we will consider the classic strategy of using the indicator. Ichimoku indicator description and parameters. The indicator calculation is based on moving averages with different periods and offsets. Each line has its own name, and it is easy to get confused in them for a beginner or an inexperienced trader. Moreover, the graph displays 5 lines and a filled space between the largest cloud. Ichimoku indicator description and parameters. Parameters of the 5 lines of the Ichimoku indicator with explanations. Tenkan-sen is essentially a moving average over a certain period. The default is 9 periods. Kijun-sen, the same average, only a longer period is calculated. The default is 26. Senku span B, the average of the specified bars. By default, it has the longest period of 52. Senku span A, average Tenkan-sen and Kijun-sen, shifted forward by the Kijun-sen value. Chinku span, the last line shows the current closing price shifted by the Kijun-sen value. Ichimoku indicator is the basis of a trading system. The area cloud between Senku span A and Senku span B is filled with a different color. If A is above light, if below dark. Essentially, the cloud shows the current trend. One glance is enough to understand who is dominating the bulls or bears market. Despite the simplicity of Ichimoku's calculations, with its help a trader can identify a trend in the market, avoid losses during a flat and accurately calculate risks. Parabolic SAR system is the analysis of trending markets. The indicator is plotted on a price chart, and in its essence it is similar to a moving average. But the difference between Parabolic SAR is that it moves with great acceleration and can change its position relative to the price. In this chart, we see a downtrend in the Canadian dollar. At the moment when the price crosses the Parabolic SAR lines from bottom to top, the indicator turns and its next values are below the prices. This is a possible signal that the trend has slowed down and it is time to take profit on previously open sell orders. That is why many traders include the Parabolic SAR indicator in their arsenal, as it is a great help in identifying the moments for exiting the market and taking profits. Another use of this indicator is to use it as a trailing stop i.e. a trailing stop. Let's say you already have a buy order open. Prices continue to rise and your floating profit is increasing. Along with rising prices, the Parabolic SAR also rises, prompting to what level you need to move your stop loss similarly for sell orders. Basic trading system. Okay, stay tuned. The classic Ichimoku trading strategy contains rules that are difficult to transfer into the code of an advisor. There are too many conditions to be taken into account. Therefore, professional traders use the indicator in manual trading. Ichimoku shows flat zones, the asset price is in the cloud, and 2 support and resistance levels. The first rule of the strategy is not to trade in the cloud. Trading signals appear after leaving the cloud. Ichimoku indicator description and parameters. Trading rules entry, stop and profit. After the price exits the cloud, it is necessary to wait for the price to return to the first border of the cloud. In fact, this is a technical pullback, which is a signal to open an order. The second cloud border is the level at which the stop loss should be placed. It is recommended to set a stop slightly below the level, plus the size of the spread. Stop loss moves after the upper border, thereby reducing risks. Take profit is set 3 times more than the loss. There are several more interpretations of the strategy with an earlier entry into the market. For example, when the cloud changes its color. But this approach generates a lot of false signals. The screen below shows the exit from the cloud, technical pullback, stop and profit levels. This is an example of an ideal signal. All other signals, thanks to the stop, are limited in loss. However, there are moments in which a trader needs to make a decision to reopen an order. These are the so-called price outliers that break the stops.